Just want to go through
Sure.
the real estate investment the benefit of real estate investment with my viewers.
Yeah.
So basically, one is the rental property. It gives the real estate investor the chance to purchase a real rental property and able to recoup some money from rental income, and then the
Yep.
income are for those who are taking loans to purchase the properties. And then next one would be understanding the market, which is very important. Like you mentioned, it's in order to predict, right? We have to understand the market very well.
Yep.
There's a long-term security. So owning a rental property can afford investors a sense of security because of the property's appreciation in value over time. And
Yes,
then
sir.
there's the tax benefit where government offers tax breaks for property depreciation, insurance, maintenance, repairs, travel expenses, legal fees, and property taxes, and a couple more benefits such as the real estate appreciation. That includes the appreciation of capital assets over time. Property value will be way more than 30 years from now.
Yeah.
Um, and then rent another one would be that investing in real estate is a hedge against inflation. So with higher inflation, the higher the inflation, the more the rental income and the property value. And also, the last I want to say that you are being your own boss. You can make your own decision. So that's where, and you already explained it, and I want to thank you for that. It's like you have to be like careful about making your decisions, right?
Mhm.
Because since you're your own boss. Can you, Blair, can you explain it with figures and examples or analytics?
Um, yeah, we talked about that. I think that analytics are important. I mean, more and more
Yeah,
people are starting to
yeah,
use analytics, especially your payments and things like that, to see
yeah,
when you're getting paid on time and who your good tenants are. You can start to use some numbers to start to kind of like look at those things. I think that moving towards by using computers to be able to track what we do, when we do it, who we tell, and how, we can start to use analytics in any business. Okay, and I think that that's going to grow, okay, like a lot, because we have in our pockets a tool that
yeah.
allows us to track something. For instance, accounting, right, is a counting of what money you have. Okay,
That's true. Yeah.
so it is the metric that we typically used as the bottom line. That said,
Mhm.
it is not by any stretch of the imagination a total inventory of what needs to be done in order to have any business be successful. So I think that by getting so that we can start tracking the actions that matter and then monetizing those on a microfinance basis, we're going to get better clarity of um, what numbers are important. Now, in real estate, as a real estate salesperson, I have to track how much I spend on advertising, how much my return on investment is for the advertising I do with the clients that I have. I have
Mhm.
to start tracking as a business owner, how much do I spend on advertising versus say giving a discount. Like I used to give people a discount, friends of friends discount for their rent,
Really, you know?
and I had I had great referrals. I never spent money on advertising because I always rented to friends of friends, and I gave them a slight
Wow.
discount and a $50 thank you to the person that gave the referral. Now, what did I get? I got tenants that liked each other, right?
Yeah, that's
Tenants
true.
that took care of my place because I had good tenants to begin with, right?
Mhm.
And they were vested in what was happening, and I saved a lot of money. So those are some things you can look at, is like how much money you spend on advertising, or can you decrease your rent a little bit to get a not spend money on advertising. Those are ways to do it. Um, can you look at boy, you were talking about digital marketing yesterday. Can you look at
Yes.
money to reach out to other markets to be able to bring in leads for doing lead gen for buying other properties? If you have money that you're looking to invest, going after pre foreclosures and things like that is a great game. It's just can be labor intensive. But how much time and money do you spend on that to get somebody to the table where you can actually get a signed contract? Because my experience on that is it's not a very predictive, right? space, because you can spend a lot of time but get a tremendous payback, or you can actually have some things that you don't spend much time on at all that also give you a very reasonable return. So if your sponsor is a commercial real estate company, they may have more metrics for their sectors. Like
Yeah.
I had a slide I was going to show you, or if we got into the numbers, which was talking about the national property type cycle based on locations. And maybe we'll do it in another show where I put
Yeah.
together kind of presentation from
Yeah.
a commercial real estate standpoint.
We can have a separate podcast or separate talking Biztech
Yeah,
show.
because there's a life cycle that goes into building a property. You got to build it. There takes a lot of money up front. You've got
Yeah.
your hard cost of the land, you've
Mhm.
got your surveying, you've got your zoning, you've got any negotiations, you got your legal work, and then you start spending some money, and then you build the property, right? And then you get taxed on the returns and all this stuff, and then you get it where it's depreciating, right? Because it's being used and lived in, and depreciation. Then you got to spend more money to actually re-up the value of the maintenance and things like that. So there's a life cycle of any business, and what metrics you measure depends on where you're at in that cycle. Okay.
Yeah.
Um, like on my startup, I'm trying to figure out what analytics I could use to help figure out whether or not people are getting sober or not. That's just a market I feel very strongly about, because I feel that if I can get people that are new in recovery to be using a tool like this to help them, then it was worth every penny just getting it built. Now, if I see it growing, right, and I see it being adopted in other sectors, right, then I know I'm onto something with the technology and how I've built it. Okay. And there are lots of analytics you can do based on what industry you're in. Okay. You did a great job of talking about that earlier, about the benefits of tax benefits and things like that in real estate. There are those in other fields too you can write off. So what analytics you use are going to be specific to you and your business. Right now, I'm just trying to get my MVP built and get what I have patented
Yeah.
realized. So
Mhm. Okay. Yeah. That makes sense. And good luck with Sober's screen. Is that
Sober
is
Screen, right on.
yeah?
Sober Screen and Sober Stepper. The software is Sober Stepper. It's for taking steps and
is,
accountability
is that how
software.
you spell it though? By the way,
Yeah, Sober Screen, one word.
Sober
Yeah,
screen. Perfect. Um, I do have a question for you about the passive income, but before I
sure.
do that, I just want to share this with you. So depending on the location, you could be earning significant account to cover your expenses,
Yeah.
and you can make extra money on the side. Um, I want to know, how do you make passive income from investing in real estate?
Um, well, we've talked yesterday a little bit about Rich Dad, Poor Dad. And in it, he talks about
Yes.
assets versus liabilities. And then there's, I forget what it's like, earning income, and then you got to have revenues, and then interest, that you're making on your money. But it's like the money that you, like, for instance, on my apartment buildings, I buy it and then I am charging rent. Now, out of that rent, I've got to take care of the bank note first, okay, because it's not all my money that's in the building. Then
Yeah.
I got to take care of my insurance to make sure that if it burns down, we got covered. We got to take care of your maintenance and your utilities and all that stuff.
Yeah.
So to get passive income, you've got to get past those expenses, right?
That's
And then
true.
you got to get that money and bring it into you in a way that either is, you got to consider how you're going to bring it in. Do you then have an account for that property? Like, is that property set up as an LLC? Because then you might want to be setting it aside, right, as a rainy day fund for that LLC. Because an LLC is just a shell, to provide protection for you, right? But you can set that up, and the passive income that you're getting could go into a rainy fund first. Why? Because then you're not taking it as income, right? Because anytime you take it out of the LLC and you declare it as income, if you're transferring it into a corporation, another shell, you've got to decide how much of that is truly income and how much is dividends, right? Because that's going to affect your FICA. That's going to affect your taxable rates on the other side, right?
Yeah.
So how you structure it's going to depend on how much you get that passive income. But you have to first pay your basic bills. And I've had people tell me, "Well, I make over $100 over my basic bills, right? And
Yeah.
so it cash flows. And I have a hard time with that because, man, round numbers is one guy told me it was about 20% he figures for you know burn rate of revenue of utilities and stuff like that. And when I've looked at my numbers in the past, it's at least it's in that range all day long. It's not like it's free to have a property once you pay the mortgage. You have to still have money set aside for the insurance, the utilities, and all that stuff. The water, trash, all that stuff comes out of your bottom line. But once you get that money above that, like for instance, on my properties, I almost doubled my rents. Okay.
Wow.
And I know people are just some people will hate me even saying it, but I bought distressed properties. I redid all the hardwood floors. I rewired them, right? I shifted the central heating to electric baseboard heat. Why? Because it was cheap in that area. I had to look at that. Okay. And then it gave them more control over their heat. Okay. Which then allowed me to step out. And then I spent money on the cosmetics. Okay. I made an old building, fixed it up, fixed the holes, fixed the floors, resurfaced everything. And then I got it so that I doubled the rent. I went from $500, well, not double, but what, 40%? Because I went from $500 per month to $800 per month. Okay.
Wow.
But I did that by making it a different space.
Yeah.
Did that by making it much more attractive, to the people. And then, so your cash flow is going to also depend on how much money you put into it if you're changing the look and feel of it, okay, or time. And you
Hmm.
got to pay yourself for it. So when people talk about easy passive income, I'm like, man, it took a lot of work to get it so I could add that to the rent, okay? And you don't just get it out in a paycheck, right? You get it out with increased rents. So it's difficult for me, with my experience, to sit there and just hand somebody and say, hey, just buy a building and just let it raise the rents a little bit if you think it's under market. That could create passive income.